Welcome to Bears in Exile. Today is May 26th. We'll be going over the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And starting off with the daily Dow, you can see that we have ended up today with a hammer. And the short-term moving averages are starting to move sideways. Note the bubbly expansion now. It's become very evident as we've leveled out. So at some point, possibly soon, we'll get an uptick to repair this, and then it will be able to decide what it wants to go and do with itself. We do have plenty of room. We're smack dab in the middle of the channel. Secondaries are low, and they still do have some room to go on the downside should they choose to do so. So by no means is this a sign that all of a sudden that we're going to just pop up, but certainly it is possible that we will. And the SPX, also a hammer. Notice that the it is a much fatter hammer, which is unusual since the Dow normally has larger moves than the SPX. But the most important thing is we have an uptick. So we do have this bubbly stuff here, but we do finally have an uptick. And if we look at that, we do have a price target right around 133.2, and so it won't take much of a move to hit that, and once it does, this bubbly will be fixed, and this can decide to go and do whatever it wants to go do with itself. But we do have a target, and that should be respected. And I say that because yesterday we had an uptick on TNA, and we called out that the target was $83. That was met today with some extra to spare, and we are getting a little bit of crossover on the short-term moving averages. There's not much in the way of a bar up here to deal with. Not that we'd have to deal with it because it is a bullish bar. So and we also have this descending wedge looking thing, and so if it were to break out to the upside, that would be very bullish, and descending wedge, it's supposed to break out to the upside. So anyway, we shall see what happens. The secondaries are all mixed, and actually I don't know where I have that one on here. There, that's better. On the VIX, we said yesterday that this was a continuation candle and that it did not match the Dow and the SPX, and sure enough, we've got another big red bar. We're having crossover on the short-term moving averages, exiting the bar, which has been beat up rather nicely. Not much to say about the VIX, except for things are starting to point down on it, and which in turn would suggest that the market will go up some. I'm not totally buying into the idea that the market is just going to shoot off here. We discussed in previous videos about having the 1305 target, and whether or not the pre-market action of yesterday met that requirement or that target. It's not actually a requirement, it's just a target. So we're going to see. That's all there is to it. And the UUP down, gap down, almost filled the gap, but not quite. And it has this ugly spinning top thing, which I hate spinning tops. And we're sitting right in the middle of the bar. As long as it hangs out here, the bar will continue to sustain damage, and which is good for the long term. things don't go down in a straight line, they don't go up in a straight line. And the more resistance and the more damage you do to the long-term moving averages, the more freedom that you have later on for making another move to the upside. So, that this is going down is not the end of the world to me. And FXE, big move up. The Chinese say that they're going to buy Portugal's debt next month. And, I'll believe it when I see it. What kind of insane person would want to buy their debt? But, we'll see. And we do have a hammer on the FXE suggesting that there will be some more move to the upside. We do have an uptick, which gives us a target. And that target was either met or within like a breath of being met. So if we do have another up move tomorrow in the FXE, that is taken care of as well. The bar here is bullish, so if it does happen to go up, this is not going to serve as resistance against the move up. Secondaries are almost all pointing back up. The MACD is still, the MACD is still flat, although the histogram is ticking up. So it would appear that we are due for a move up of some fashion. GLD. We had mentioned that GLD, we wanted to have some more expansion of the moving averages last night, that would be much more comfortable than what it was looking like. And we got this sideways to down move today with a hammer candle. And not really any decent development on the short-term moving averages. The sideways move actually just made it look more bubbly than it did prior, and which, when it's expanding, normally it does look like it has excessive separation, which is normal. But now, if they're already putting the brakes, not the brakes, but decelerating or whatever, that's what points out problems or whatever. On the positive side, let's say that we have another sideways to down move tomorrow, and that produces a down tick. Well, the target area is so close that it'll probably be met intraday, in which case all of this, is fixed. Not that there's much to fix, but even so, that's gold for us. We do have a positive cross of the MACD underway. The RSI and the stochastics are pointing down, but they can loop right back up. So I'm not worried about gold. And if the dollar is going to decline as the euro goes back up, then the gold is just going to go up anyway through inflation. And SLV, another decent day. It was sideways, and it lost 40 cents or something like that. But really, it's sideways. We have more development as to the cross. It's evident that the cross won't be just a super flip and jump right through, it seems like, which is fine. MACD crossing over, and we do have this hanging man, a little, almost has no real body. So would that say that it needs to go down a little bit? It could. You have almost an identical one here. It just has a little longer of a tail. And you did have 2 down days before it came back. So maybe it needs that after going from, what is this, 33, 32 almost, all the way up to 36 and a half. So, and almost to 37. So I wouldn't be worried about that either, but that's just me. And there you have it. It looks like possibly we'll be going into a bounce, and if it does, the most interesting thing will be what happens when it hits the top channel line on both the Dow and the SPX. Of course, the news is driving most of this, as the euro has been fluctuating overnight in sums of an entire penny, which is huge for currencies, and it's done that multiple times in the last 48 hours. So certainly a time of flux, and we're going to have to see if the bulls get it together, and if they do, are they going to run out of gas when they hit the upper channel, which they keep doing over and over and over. They get it together, boom, out of gas. They get it together, boom, out of gas. Is it going to be different this time? Who knows? And there you have it, market overview for tonight. Thanks for watching, and as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.